right, guten Morgen. Hello, hello, hello. How are ya? How's your mum? Jumbo. Ohio. Ni hao ma. All right, good morning, everybody. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning. Hey, good to see you. My name is Wayne. I'm a currency trader just like you. Guess what I did all yesterday? Currency trading. Yep. And even though the markets are closed tomorrow, what am I going to think about all tomorrow? Forex. I'd like to thank members of FX Bootcamp for a wonderful meeting yesterday. We kept it under 4 hours. That's always a big one. 3 hours and 45 minutes. That's pretty good. A lot of great insight. I thank you for sharing and caring and participating. I appreciate you. Yep. Cool. Jim says, great meeting. Yeah, Jim, that was what, your one of your first, right? Yeah. Anyway, so cool. Yeah, I enjoyed myself as well. So, yeah. Awesome. Cool. So, anywho, today it's time to get some trades on, primarily based on next week's setups. We got a lot on my mind. I got my mind on my money and my money on my mind. So, today we'll go through the charts, and I think that's it. Let's keep it simple, huh? In the description below, there are some links I'd like you to take a look at. Would you please leave a link? Would you please leave a review about my book? Sky Killer, I did that yesterday. I don't want to do it again. I did it less than 12 hours ago. I don't want to do it again. But watch the video on about the swing trading group. I cover it in part 1. Okay? I literally covered part 1 in the first half hour of last night's swing trading. Yeah. So, yeah, please do that. Cool. So anyways, I wrote a book in 2008. Actually, I wrote it in 2007 and published in 2008. Many, if not most of you already have it. Would you please leave a review? Okay. More than 10,000 people bought it, and there's over 150, 140 reviews. That's it? Out of 10,000? Seriously? So, yeah. Could you please leave a review? It took me a year to write it. I think it'll take you, I don't know, by the time you log into your Amazon and all that kind of stuff. Yeah, it'll take you 10 minutes. But I'd appreciate that if you could. Cool. There's a link to QuantBox. Remember my super secret fundamentally based alert service? Well, it has now been formally released. And it's now available. The name of it is QuantBox, your macroeconomic quant in a box. You should check it out. It's pretty cool. It logs into databases all around the world, both private and governmental. Logs into the databases, downloads the data, reformats the data, and then it looks at the data, quote unquote, look. Okay, the AI takes all this information and then scores it. So imagine all the macroeconomic data for the Great British Pound, scores it, and then does comparative analysis of the pound versus the dollar, the pound versus the yen, the pound versus the Aussie, the pound versus the euro, so on and so forth, and does comparative analysis, looks at technical analysis, and it looks at seasonal analysis, It analyzes the commitment of traders report. It even calculates retail positioning because it has the data to figure it out. Oh my God. Like, it's a game changer. So anyways, that's quantbox.co. The link is in the description below. It's $7.90 to check it out for a week. It's fair, right? $7. I think it's $7.80. $7.90. I think it's $7.90 to check it out for a week. It's fair, right? I think it's fair. Cool. So check that out. I lead a community of foreign exchange traders, and I've been doing that for 20 years. So that community has gathered a lot of resources. That community is called FX Bootcamp. The link is in the description below. It's very, very, very prestigious. The requirements to get in is to pay $88 a year. Oh my God. $88 a year lets you in. That's it. That's how prestigious it is. Okay, yes, I went to Harvard. Maybe you'll learn a few Harvard things, but I price it like it's the Cambridge Community College. So you get a Harvard education, but you pay for Cambridge Community College. I think that's fair. Cool. There's a link to tradersway.com, a trustworthy, ethical foreign exchange broker. Fast execution speed, faster than most. Wonderful swaps, better than most. And competitive pricing. If you find a broker that is advertising cheaper spreads, it's because they're liars. And you're like, what do you mean by that? Oh, they'll slip you in. They'll slip you every time you enter a trade. Then they'll slip you a little bit every time you exit the trade. So let's say it's a half a pip. You wouldn't even notice. But here's the problem. You might have signed up for some broker that charges, that promises you some really, really, really cheap spread. Let's say a half a pip on euro dollar. Oh, great. Except then they slip you a half a pip when you enter. So now you're paying a full pip. Then they slip you another half a pip when you exit. So now you're paying a pip and a half, and you think you're paying a half. So you're paying a lot more. Why don't you just go to a trustworthy, ethical broker, to begin with? No, ramen. No, don't worry about that. All right, so anywho. But by the way, ramen, if they're charging $1,200, anyways. All right, so cool. So thank you for being in my life and being part of this community. Those resources have been made available to you. I hope you take advantage of them. Cash says, how do you access the videos? All right, let me do this. fxbootcamp.com, fxbootcamp.com. All right, so look, I don't think I have it on this account, but let me log in. I think I'm a video only member on this account. And that's, you'd enter live, community, and events. And you would click on meetups. Okay, that's funny. That actually shouldn't be there. But it'd be up in here in room recordings. Okay. Now, because this account doesn't have a day trading membership, oh, that's interesting, but it's down here. I wonder how that works. It just won't, it just doesn't let you in, I imagine, huh? But anyways, that's how you do it, okay? So if you don't have the membership, like if you don't have a day trading membership, it won't display the day trading login, the day trading videos, and it won't let you into the room. If you don't have a swing trading, so on and so forth. Okay. Okay, so here we are. Dollar's still caught up on its support line around 100. So it's support, but it's also psychological. Okay. Okay. Yen has been weak, but we're looking for a bounce. I've been waiting for a couple of weeks for yen strength, and we will take a look at that. We might just need the right kind of market conditions. Okay. Kiwi is a dog with fleas. We already know that. We've been killing it. Euro is ripper strong. We know that. And remember the trades we set up early last week? So a week and a half ago, remember we were doing this one. And then I think 2 weeks before that, we were doing it. I just want to reiterate, let's go back. Do you remember these trades? You remember? Let's see if I have a QB open, quant box. I do have a QB open. Just want to show you, okay, let's sort it by uptrend. Euro Kiwi is one of the strongest uptrends. See that? It's just beautiful, huh? Now, the expected scenario, technically, okay, remember, QuantBox is just doing quantitative analysis of macroeconomic data. So, right, using our technical analysis, the likely trade is from here to here, and this is beyond normal pips. Okay, so R3 is probably our realistic target now in this time frame. Isn't that cool? Now you might be questioning, well, how does QuantBox get to that data? Well, let me open the window. It's a cross pair. Okay, so you go to Euro Kiwi. Let me zoom in a little bit. Okay. And, you know, what it's saying is it should be going up, so you should be making money. Okay. So January is supposed to be a little bit down. This January was a little bit up. Ooh. Okay. Then February to March is supposed to be a little bit down, and it was a little bit down. Okay. March to April, April to May is supposed to be up, and it is up. So it's not bad. It's doing what it's probably doing. But look at the score. Technically, massively bullish, right? Based on the overall score. COT, which is institutional investing, says you should be long. Retail sentiment even says you should be long. Seasonality says you should be long. Trend is very, very, very long. And GDP favors Euro over Kiwi. Okay? Now look at this season. We go retail sentiment. Retail sentiment. Check this out. Why is it a 1? That means you should be a buyer, right? It's because QuantBox has been programmed to say if retail is heavily short, hunt their stops. Was that right, Jimmy? Okay, I'll check it out. Look at that. Ha ha. 90% of retail is selling this. What they're saying is it can't go higher. Ha ha. 75% of the market is long euro. And 60% of the market is short Kiwi. What? 75 up over 57 short. That's beautiful. Don't you stink? Don't you stink? Oh my God. And yet retail short. Oh my God. Oh my God. So anyways, so what's happening here is we're hitting all the retail stops. Okay? So somebody might say, oh my God, my broker's hunting my stops. No, I'm hunting your stops. Anyways. Cool. Oh, I guess I should bring that back. Hang on. Let's go to just see where we are today. I didn't do this yet. Do the heat map. Let's go back to the heat map. Biggest winner today, Euro Kiwi. Then Euro Aussie. But we're also bearish on Aussie. You see how that works? Oh, thank you, Jim. Okay. Cool. Euro versus CAD. I guess Euro's strong, huh? Then what? Pound versus Kiwi, which just means Kiwi is weak. Because really I'm neutral on pound. And then you can see why. Euro's killing pound, but pound's killing Kiwi. So clearly Kiwi is very, very weak. That's all part of our outlook. Oil seems to be stabilizing today so far. Okay. Biggest losers. Gold is back below 2,000, dropped 1%. Check this out. Kiwi yen down. Aussie yen down. Well, we know that because those are the ones we're weak. Literally last night, okay? Literally last night, we looked at things and said, if there's a risk on moment, for example, if gold falls, you should probably sell Aussie yen and Kiwi yen first, not Euro yen. Of course, Frank, that's what they do. Sure. Institutional traders are not better traders. But they do trade differently. Yeah. But are they infallible because they're gods up in their ivory towers? No. They're just a bunch of dudes. I was in a meeting, I don't know, a month and a half ago, and it was a Zoom meeting with a fund manager. Okay? And he said something, and I did this, and he saw my watch, and he's like, what watch is that? And I'm like, oh, I just bought it. And I show him my watch. Okay? Fancy watch. It's French. The company is French, but the watch is made in Switzerland. Okay? So he noticed it. Why? He's a hedge fund manager. This is what dudes talk about. It's a man jewelry. So he's like, oh, what watch is that? And he's like, oh, well, I have this one. He shows me. Now, he's got a Cartier. He's like, mine is also French. Well, the traders behind him apparently flipped out And they're like, dude, are you talking about your watch? Are you, how do you, what do they call it? Are you flexing your watch in a meeting? And he's like, no, that's not how it went down. And they're like, oh, right. And then they start shaming him. Oh, you only have a Cartier? And then they start showing their watch. And like, oh, I have an AP, Audemars Piguet, right? And someone else has got even something nicer. And they're all boys, is what I'm trying to say. Oh, your $10,000 watch is bullshit because I have a $20,000 watch. And then the other guy says, well, your $20,000 watch is bullshit because I got a $50,000 watch. And this is... And my point here is these institutional traders, they're not infallible. They're not gods. They're just boys. Most of them are just boys in a $1,000 suit. And they can be wrong, and they do make mistakes, and they are certainly not gods. They are definitely mortals. So you can just imagine now a room full of these traders chitter-chatting now over their watches. And yeah, they're just, by and large, little boys in $1,000 suits. Yeah, my ego's better than yours. Well, actually, what you need is ego. What you don't need is egotism. Made us like I would close my Zoom. But it was funny, though. It was just funny. It just sparked. They were shaming him. You know what I mean? And it was so funny. So it led to another conversation. It didn't all happen at once. He's like, dude, as soon as our meeting was over, he's like, I got burned. I'm like, what are you talking about? Oh, my Cartier, right? And they burned him. They burned him at the stake. Like, dude, you better come heavy if you're going to start doing that on a Zoom call, right? So anyways, I it was funny. But to me, it just shows that they're not gods. And sometimes as retail traders, we're like, oh, they're so smart. They're the smart money. They're the one, and yet they're no better, no different than you and I. They don't have any different information. They might parse the information different. Like let's say they have a tool like QuantBox and it helps them make decisions. Okay, great. But at the end of the day, they're definitely mortal. And you can be as good as them, if not better. Okay, so I'm just trying to burst that bubble that they're somehow different. Okay, do they all have Ivy League degrees? No, but if you're going to work at a bank, it certainly helps. Okay, but they might have people working for them like quants that do have Ivy League degrees in economics or in mathematics, All right, cool. So anyways, Euro killing it, and we've known that for a long time. I think since March 22nd, there's been like a resurgence in our macroeconomic bias toward Euro, and it has proven to be correct. Okay, now going back to the day trading group last night, we said if the markets are risk off, we want to sell Aussie yen. Okay, and you're like, oh, it's down. Yeah, that's cool, but it already happened, right, Wayne? No. The meeting was, okay, that's about 5 hours ago, 8 hours ago. No. When we met last night, we were up in here. Okay. Interesting, huh? Aussie, but even more bearish than that is our Kiwi setup. And if we zoom into that one, same thing. We were on the precipice 12 hours ago, right? So that's what's happened since our meeting. So if you were trading last night, like European session or Asia session, you would just have to make that determination, right? That the market's bearish. Cool. Okay. Now, I think we have them over here if we do pivots yen, not scan yen. You'll see like we have this. They're not perfect setups, but the logic is there. Okay. Now, this one I did 2 weeks ago. This one I did 2 weeks ago. And you can see, not great. I was hoping for a breakout mid-month around CPI. What it did is it went back to the range, went to the top of the range, right? Then it went back to the bottom of the range, and then it broke out. It did it on the second turn, not the first turn. And that one's now Oscar Mike on the move. Euro, not even interested in selling that one. Okay. CAD yen, I got to mark this. Okay. Now, one of the biggest points to this, and I think 99% of you guys know this, but starting here, I'm expecting downward moves. Maybe not on CAD yen, but certainly the yens. And so this time of year, I wait. And at some point, if it appears, I engage. Now, the interesting thing about that is we know it not just days in advance, but even months in advance. Okay? And so now you're just in the waiting game, and yeah. Maybe, baby. Okay. And I mean down for months, not hours. Well, what? Yeah, months, bro. Yeah, man. Right? I know, right? So on risk off days, you want to do that. On risk on days, you want to zip over to these suckers. And we're just not in those days. Those were the days. Okay. Now, Kiwi dollar down, euro dollar up. What does that tell you? While euro is very strong and Kiwi is very weak. Okay. Yeah. Okay, so you can see here, riding the moving averages. We hit a level of support. Obviously, it's already been drawn out. We're not shocked by that. By the way, do you know what this is? That dotted line? It's labeled bearish profit target. So bears hit this target, covered their spread, and are out. This is all profit taking and stop hunting. Cool. How nice. Okay. This is the Friday front run. Okay. This is the Wednesday exit. This is the counter trend, and it'll be interesting what happens next. But it should be pointed out that we did hit target. Nice. Okay. And we've been above the moving average for a bit. Okay. Look, down, 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 up, up, sell. Let me do this in black. There we go. Down, 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 up, sell. Down, 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 up, sell. Down, 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 up, sell. Remember, this is 3 or 4 hour pullbacks. This is like 8 to 12 hour pullbacks. They're not short, quick, small pullbacks. Okay. Then you get this down, 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 hit target, up, 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 higher, high, down, down, buy, up, 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 down, down, buy. And that will last forever until it stops. Now, Frankie says, well, this is ranging on a higher time frame. Okay, then you find your resistance, market, find your support and market, and then anticipate the likely rollover of down, down, of 100% down, 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 and then up, up, and then a rollover this way. And so you would take profit here, and then you would re-engage as a bear here, and you would target back down to here. And that's how you day trade. Okay. Meta's like, where's the double bottom there? There isn't one. It's like, it's above the moving averages, roll reversal, then a new higher high, roll reversal. Okay. So yeah, you're like, bulls can participate at double bottoms and higher lows, right? So here's the higher low. Here's a higher low. Now, ideally, there's a double bottom, make it easy. But the way to kind of, I mean, you wouldn't have known it here until it happened, but you definitely knew it here, higher high, so you engage in the higher low. But the most important part of this, right, Meta, is this dotted line. We already knew the almost a week earlier, right? Almost a week earlier, we, like the swing trading group, we would have had this, like, if you're short CAD, okay, which we meet on a Thursday, this isn't, we hit this target on a Wednesday. So we would have known this on our Thursday swing trading group that down here, if there are bears, and they're proven there were, that this is where they would take profit. So if you're a bear, you should probably take profit. Okay, when? How about after a higher low? When would a bull enter? How about after a higher high, higher low? So sort of like a bear is going to exit around this price, and a bull is going to enter around this price. And if we didn't have this dotted line, Meta, I'd have no idea that that was going to happen. It's more like if it hits this dotted line and then you get this kind of stuff, then it's definitely technically, the downward move is definitely technically over. Yeah, oh yeah, let's do oil. Well, what's the narrative going on right now, Meta, before I even look at it, is recession. By the way, everybody, yesterday in the swing trading group, we must have spent a full hour in conversation about the possibility of recession in the second half of the year and what we would do about it. If you're not asking yourself those types of questions, you're really not trading properly. Yes, Jim. Yes. See, we live in a world where most people on Wall Street have less than 20 years of experience. So all they know is if we go into recession, the Fed's going to cut. I would argue that the Fed created the recession is useful, and there wouldn't be a need to cut. At least not quickly. But everyone's ready, like, as soon as we have negative GDP, boom, the Fed's going to cut. I think the Fed, to quote Elizabeth Warren, the Fed wants to put 2 million people out of work, according to Elizabeth Warren. Well, that would bring down rents. That would bring down inflation. But also you're going to have to lose money in your house. So during COVID, I think my house went up 20%. So I probably need to lose 20% to get back to where it was, which is fine. And that would help. We'd probably have to have another leg down in the stock market, which is okay because A, I can triple leverage. B, I'm like 20% cash in my portfolio. Hey man, if the S&P 500 wants to drop down to 3,000, sweet. I already have plans. I know exactly what I want to buy. In fact, I have orders in the market. Like for a big stock market decline, I have more orders in the market because I already know what I want to buy and why I want to buy it. Maybe I don't get the perfect price on the way down, but I also don't believe we're going to have the end of a world recession because I think it's a controlled burn. So yeah, so by all means. So that's what's happening, but I have a feeling that they're somewhat wrong, this idea of Fed cutting, because I'm perfectly comfortable at 5%. And I think many of us that have been around more than 20 years, we realize that 20% is not restrictive. But it was enough to change people's look about risk. So banks now are increasing credit standards, which means they're keeping more cash on their books and they are not lending money to mediocre borrowers. In the past, they might have done it, but now they're not doing it, which the Fed has told us is the same as the Fed continuing to raise interest rates. So if the Fed wanted to raise interest rates just far enough for banks then to tighten credit, because that's all the Fed is doing, making credit more expensive. So if you can't afford to borrow, then you don't. But now credit standards have gone up. So now even if you want to borrow, you can't. So the Fed has even said it's the same as the Fed raising interest rates. It's just someone else is raising interest rates. If you're mediocre borrow and you wish to borrow money, you will have to pay significantly more money. And therefore, now, maybe you don't make that decision. Either way, money is more expensive. Okay, but now banks are doing that. Now, the next big thing, of course, is commercial real estate's going to have to roll over mortgages. Interesting, right? We've known this for a very long time. And remember, people don't want to work in an office anymore. So if you own an office building and you only got 60% renters, then what? Well, now your property value is going to fall. Uh-oh, I hope your mortgage has been paid down. But also the cost is going up. But how about this? Credit standards have gone up. Whoa! So now you have to roll over your mortgage on your apartment building or on your warehouse or on your skyscraper. And guess what? The property value might be down. Vacancies are up. So rents are down. But now to roll over the mortgage, credit conditions have increased, not just in cost, but in standard. So now you go to the bank and they're like, we're going to only lend you 65%. Whoa, what? Yeah, you're going to have a 35% down payment. Sort of to think about what they're saying, right? Now, what if you had, let's say, a $10 million mortgage, but now the market says it's only worth $9 million, okay? Or let's say $11 million. Okay, it used to be you have $11 million mortgage. Okay, great. It's now, the market says it's now worth 10, but the bank will only lend you $6.5 million. So they're like, we'll re-up, we'll lend you $6.5 million at double your old mortgage rate. So instead of 3%, it's 6%. But you have an $11 million mortgage. So you have to come up with $4.5 million. What? You have to come up with $4.5 million in cash on rollover on a commercial property that's only worth 10. So now to you, if mark to market, you got to put up 45% of the value. Let me just say you might not have 45. You might not have that kind of liquidity. You don't have that kind of cash. So now what do you got to do? Oh God, you got to go get some investors. So they're like, Adam, buddy. Hey, man. I need you to pony up $4.5 million, but I'll cut you into the deal, right? And now you're out there borrowing money to cover the rollover on the mortgage. You're like, yeah, well, the thing is, I got this $11 million mortgage. I got to roll it over. They're only going to give me, the new value is 10. They're only going to give me an LTV of 65. So here's the thing. I need to put in $4.5 million to cover my mortgage that is on a property that's already lost 10% of its value. Tough sell, right? So Adam says, yeah, I'll lend it to you. So I have to pony up the current market value of 45%. So I'll tell you what, I want 65% of the profits. I want the 65% of the upside. I want to become the majority owner of this property. And yet I'm going to have you carry the mortgage. And so now you have to choose, get screwed by your new investor or lose the whole deal and destroy your credit and be out of the real estate game forever. So you decide to get screwed, which is another way of Adam saying, I'll save your ass. So Adam's the savior, depending on the point of view. So anyways, that's how the real estate game works, and that's probably going to happen. So you might want to save a big pool of money and wait for the commercial real estate market to run into trouble probably next year, and then muscle your way into a long-term deal at very favorable terms. Diego says, am I going to do a real estate course this summer? I don't think I have that kind of time. I'd love to, and maybe. But it's already, what, almost May. Am I going to have that kind of time? I don't know if I'm going to have that kind of time. I got to do a summer school, though, huh? Gee whiz. Yeah, I don't know. Yeah, I don't know. I mean, it's exciting, right? Anywho, so Bitcoin's down, gold is down. And in that scenario last night, we said buy yen, ignore dollar. This is still a buy zone. Sorry, I'm burping on ghee as I talk. That's pretty rude. I apologize. Let me tell you about the ghee burps, huh? Oy vey. So, look, hang tight here, man. If you're a bull, this might turn up and you take it. If not, maybe later. If you're a bear, and it's very, very interesting. You definitely can be a bear. The target for bears is 1850. And that would be recession fears. Oh, yeah. And to carry the thought process further, Jim says he agrees. He doesn't see the Fed cutting interest rates this year. Part of this up, inevitably, are gold investors believing the Fed will cut, that we will go into recession, the Fed will cut, and that's that. If they're wrong on that, then this needs to be adjusted on the short run. I'm not going to say all the way to the bottom, but let's just draw it that way. And then we learn more realistically that, yes, we're going to have a recession, but no, there's not going to be a cut. And inflation will be more persistent than originally believed because the inflation problem hasn't been fixed on the short run. And you get some more up. So whether that's a double bottom at 18 or a retracement to 19, we don't really know. But I think the long run story is pretty reasonable for gold, as long as we're not in a disinflationary market condition. If we are in a heavy recession, okay, things are bad in the second half and next year, then a disinflationary market is down for gold. Okay, so that means somehow, some way, inflation goes from 5 to 4 to 3 to 2. And how does that happen? If the Fed's not raising interest rates, how does that happen? Okay, Bitcoin goes from 25K to 10K. Yeah, that's how you do it. Gold goes from 2,000 to 1,600. The S&P 500 goes from 4,000 to 3,000. And I don't need to cover it any further because I spent a good hour going through the math of how this is created and what to look for to spot if it's happening. Okay? Cool. Okay, cool. So make a decision. Where are you in the market? So I'll be watching the S&P 500 closely. I got some ideas of things I want to do. Short run and long run. So going into oil. Okay. It's very, 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 very low. Okay. And we're pretty close to that gap fill. So if you are a bull and you want to try to buy dips, you know, you can, because we're trying to stabilize above this. Just be prepared for, not today, but you can try. It's very, very, very early in this cycle. So the more conservative thing to do is let Friday be an up day and then maybe buy the dip next week, because you would get a moving average direction like this, and you get a moving average direction like this. And next week is an up week from 77 back to 83. The danger is the downtrend continues. There's more recession fears, all that kind of stuff. And that brings us down, way back down to here. Yeah. So you still got to, if you're a bull, you still got to get in the game, right? So a bull, whether you're buying now or next week, a bull is thinking something like this. Okay. And a bear ain't. But, you know, I think there are more bears up here at 81 than there are now. But there's probably some here at 80, right? So, but you can see I already got it marked. And even though what I just drew wasn't actually looking at these boxes, I drew those boxes a long time ago. And now re-looking at the analysis, it confirms that those are about right prices. So if I was a bear, I would say, you know, it could go down here and then it pops up and then we go here and then we get short again. That's how a bear would look at it. Just out of curiosity, how many people would want me to do a real estate course this summer? And by want, I mean you would give up 300 of your US dollars and spend several weeks, many weeks, going through real estate investing. Yeah, well, yeah, how it works. Yeah, that would be part of it, right? Right, Johnny? How to invest with other people's money? Yeah. Commercial or real residential? I suppose both. I did 2 or 3 real estate classes at Harvard. I have studied residential, did an entire class on residential, and then did an entire class in commercial. So that's only like 8 people. It's just not enough, huh? Ugh. One of the things that I would do is we'd go back many hundreds of years to Rousseau. And there's this idea where there's a town. Here's the town. And Jimmy lives in town, and Jimmy makes $10 an hour. But Jimmy wants to buy some land to become a farmer. He's sick of working in town. He'd rather own a farm. So there's 3 farms. One is close to town, one is a little farther away, and one's yet a little farther away. Okay? This one does, let's say, 10 bushels in productivity. This does 8 bushels of productivity. And this does 5 bushels in productivity. This one is valued at 2, this one is valued at 8, and this is valued at 22. What does Jimmy do? And it's very interesting because this was an economic philosophy. Because remember, economics is a philosophy. It's a study of human behavior based on scarcity. What would a human do? And so anyways, Rousseau worked on that and figured out the math of the philosophy of what would Jimmy do. Rousseau, I can't even spell Rousseau. I don't remember his first name. Rouss, maybe? EAU. Jean, the social contract sounds right. Is that the right guy? Sounds right, the social contract. But that's not what I'm talking about. So that's what philosophy majors read. But I don't want to do his social contract. So we're talking about the 1700s. He figured out the math of that problem I gave you. And so we would start with that. Okay. Yeah, see, I've read most of these guys. Interesting, cool. Oh. So anyways, 300 years ago, he figured out that because, let's do another search on this. There might be something more specific. And rent. We would start here. No, see, Google can't figure out this stuff. It's so funny. Google can't figure it out because it wants to sell you ads about renting apartments. But okay. Anyways, there's a math to this, and it's an interesting concept of looking at valuation models, creating a valuation model, right? Well, the answer is you can do the math. So what was it? What would you want to look at? The prices were different. The yields are different. And the opportunity cost can be a variable. So it depends on let's say you're planting wheat on this farm. It depends on the value of wheat. It also depends on what if Jimmy keeps his job? What if he goes to his boss and says, I'm thinking about buying a wheat farm and leaving town. And Jimmy's boss says, whoa, Jimmy, I need you to stay here and work and continue to work for me. So I will pay you $12. Well, then that changes. Okay. So you got to look at the opportunity cost. You got to look at the yield. You got to look at the return. Okay. And then you got to look at the cost. So there's a lot of interesting variables going on. So another modern scenario is who rents the corner retail commercial property? The one on the corner. It's got 2 walls of windows. What store goes in there? So we should be able to calculate it. Well, that depends. What are they producing? How much do they sell? So what are they selling? How much do they sell? What's the profit margin, right? At which then you need to say, well, okay, what did it cost to make a unit of product? How many units do they sell? What is the profit margin per unit? So now you got to figure out what's the total unit. So total revenue minus the total expenses, right? To get to the per unit profit. And then it comes out to what is your desired outcome profit margin, right? So now you're like, and then what's the opportunity cost of going somewhere else? So a store might go somewhere else, sell less units, but have less costs and actually make more money. You see, like all of a sudden, well, it all depends. So you have to know how to look at all these things to create your valuation model. So we would look at that kind of level of detail. So yeah, we'd have to go back to 1700, study, European philosophers of economics. I go even farther back, all the way back to the birth of libertarianism. I don't know if I would go that far back in real estate, but you could. Okay, because you can go all the way back to like John Locke, who said you have private property. And then who was it after John Locke? Somebody after John Locke said, yes, that's true, but you have a moral imperative to share your excess productivity. Yes, your productivity, excess or not excess, is your private property. Nobody has the right to take it away from you. Just because they're hungry doesn't mean people should be in your apple orchard picking all your apples. It was John Locke that said, damn it, these are my apples. It's not my problem you're starving. Okay? But then someone else said, well, look, if you have all these apples, great. You should have as many apples as you want, but you have excess apples, so you should sell them or give them away. But you have a moral imperative to somehow share your excess. And if you trade it, then you will get someone else's excess. So You might give your neighbor apples, but your neighbor builds you an Adirondack chairs to go around your fire pit. Sweet. Fair trade. Now you have his excess chairs because he's a carpenter. Okay. Then you carry that to real estate, and you want to, after we study like John Locke and then later on Rousseau, because Rousseau, I would teach you that philosophy on rent, but then Karl Marx hated rent. Okay, so we might read like Das Kapital, and Karl Marx said that the root of all evil in capitalism begins with rent. And you're like, well, wait, isn't that a fundamental philosophy of investing into real estate? Rents or rent equivalents? So what would the world look like if Karl Marx was correct and say there should be no rent? It's the same idea of usury going back to biblical times, or even in modern times with Islamic finance. And I remember I did an entire class on Islamic financing at Harvard. So I have many books on that, and I've read the Quran and many of the Hadith. And anyways, so you take that same concept where usury was looked down upon because money, the individual piece of money, wasn't being productive, yet you're charging an interest rate for giving somebody money, but the money doesn't do anything. So like, that seems wrong. But also, if a landlord owns an apartment building, he shouldn't charge people rent because the landlord isn't doing anything. So why should you charge rent? Well, then you could argue, well, I have to pay my mortgage. So if you collected rent and then paid off the mortgage, what if you owned the apartment building and you had no mortgage? Should you let people live in your apartment building for free? Karl Marx said, yes, you shouldn't charge because you're not doing anything. And rent is evil. Or at least, he might argue, at least you should only charge a bare minimum level of rent, which is great. You can get cheap rent in Cuba, right, Maida? There's a gap between the old area where there's tourists and then sort of the more modern area. There's this gap in between, and you can live there for cheap, but it's also looks like a war zone. There's parts of Havana. Havana is beautiful, by the way, so I'm not saying anything bad about Havana, but there are parts of Havana where, well, you're not sure if it's war-torn. There are some parts of Havana where cars have driven into potholes and people have never been seen again. Not all of it, of course. So anyways, but you can live there for cheap. A disaster. Oh. Yeah, it's kind of funny. You can go to somebody, you're like, what's up? And they're like, nothing. What are you doing? Nothing. What do you think about the future? Nothing. I might move to Miami. Yeah. Well, Maida, when the few times I've been to China, in particular, like even way out west, people were living. Let's say I've been around. I've been to several slums, which are kind of interesting. I've been to the slums of Brazil. I've been to the slums of India. I was invited to the slums of South Africa, and I passed. Where else? Anyways, I've been to a few slums. There's that scenario. And then I've seen this was many years ago now, in China, where there were just sort of like makeshift neighborhoods. Now, they were not slums, but they were like homemade homes. Like there was a difference. And in India is really cool because, people build right next to the train tracks and stuff. It's really cool. But somehow in China, they were more than slum, but they were homemade homes, right? But there was a time I remember reading, it must have been 25 years ago, that there were still like 50 million people in China living in caves. I'm like, what? But of course, 50 million is a drop in the bucket, but it was kind of funny. I'm not sure if that's true now, and I highly doubt it is, but it was interesting where like there were a lot of people living in caves. Like caves. Okay. Or she, Denise, or she. Well, so Denise, so these things like I think you have to say they a lot now, Denise. So if they own it, then they should have the right to charge. Well, because there's this idea that you should be compensated for risk, you should be compensated for opportunity cost. That's why, like in the math, you have to say, well, if Jimmy stays in town, what will Jimmy earn? Well, currently Jimmy's earning 10%. Okay, great. So he might want to leave. But then the boss comes in and says, well, I'll give you, he earns $10. If he stays, he earns $10. He threatens to leave. The boss comes in and says, well, I'll give you $12. And so now that changes the variables. So now he's like, well, I won't make enough money with one of these farms, so that's definitely not a choice. And then there's a break even on the third. Is the fourth farm a winner, or am I just better off staying in town? Right? And so these opportunity costs matter. And so how do we do that in, modern conversations? Well, what did we talk about yesterday? The expected return of a stock is equal to the risk-free rate of return minus the beta of the market times, right? The expected return of the market minus, this is a plus, plus, minus the risk-free rate of return. And so what we're talking about is if Jimmy just stays in town, he'll earn this number here. And if that number goes up or down, it changes the decision. So if Jimmy's boss says, no, you're earning 10 now, I'll give you 12. There's a 20% increase in the risk-free rate of return. So this needs to go up to just simply compensate for that. And if not, the value goes down. Right? Right? So like literally what this, and we've been using this in our courses, but if the opportunity cost, the risk-free rate of return goes up, then the opportunities now, if the cost of the opportunity is, right? Again, opportunity cost. If the costs are going up, then it's less attractive to you. You see? You're like, I get 12 by just continuing to do what I do. I used to earn 10, now it's 12. So taking the risk of like quitting my job and moving out to the country, and maybe I do farm number 3, but it's a long way from town and I got to drive back and forth. And what if wheat prices change? And if wheat prices go down, then that's not good. So like this is the expected return of the market. So if wheat prices fall, oh my God, then this falls even further. And you're like, really? Is that really what I do? Is that really what I want to do? If the wheat market falls and I could have just earned 20% more than I earn now by staying in town, why would I leave? So what happens? Well, throughout the cycle, of course, there's a business cycle, right? Property values need to fall. Well, that's what this means. The expected return of the farm. So to attract buyers, the prices have to fall, which then makes it more attractive. Does that tickle anybody's fancy, that kind of conversation? I'll tell you what, I would have to charge, like I said, I'd have to charge for my time. Rent isn't free. I imagine it's going to be a $300 course. And if I did it, I'd need dozens of people to sign up. So you'd have to bug me. If you bug me and bug me and bug me, I'll spend the time to do it. But you remember, for me to do like a 15-hour course, it takes me about 150 hours would be my guess. And if you've ever taught a course before, you know what I mean. Yeah. And I have to look at the opportunity cost, right? So if like 10 people sign up, oh yeah, it's $3,000 in revenue, but I'm like, I'd rather just rent a boat, sit on a boat, or maybe go hiking with my kids. Maybe I'll just swim in my pool. Right? And you're like, nah, because it doesn't cover my time. You're like, So, it's all part of the decision, right? It's only money. It's only business. That kind of stuff. So anyways, that's me being open and honest. All right. So, yeah. Boom, bum, ba-dum, boom, 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 bum, ba-dum, boom, boom, boom. Usman says, is Bitcoin to drop or fall? All right, let me answer that with a question. Are we going into recession or not going into recession? If your answer to that is you don't know or you're not sure, then stop trading. Yes, then it's going to go down. Any other questions? Just imagine somebody that is losing money in the stock market, so their retirement account is down. Their company is struggling to make money. They can't earn revenue, and they're certainly not profitable. So they start laying people off, which includes you. So now you've lost your income stream. Your cost of living is fixed. You have a mortgage. Okay, so you always spend $3,000 a month on your mortgage. You always spend $3,000 a month on food. So now, no matter what, and medicine and all that, so no matter what, you're going to lose $10,000 a month in your savings because you got to feed your kids, you got to pay your rent. You don't want to lose your house. So now you're like, I got to make up my shortcoming in revenue. Because my expenses are fixed, my revenue is variable. So now you're like, now I need to increase my revenues. What could I sell? You either get a second job, but you're looking, you can't find it. So now what? So now you're like, I gotta increase revenue somehow. I gotta sell some crap I'm not using. So you can do a garage sale, go through your kid's closet and dump a bunch of toys. That's fine. It's not enough money. Now what? Now you're like, I can sell my house, but then we'd have nowhere to live, and rents are even higher than my current mortgage. So I don't want to dump my house. And it's a down market anyway, so real estate, it's not cool. So I'm going to need to keep my house. What can I sell? Well, I don't want to sell my retirement account unless it's really desperate time. So what could I sell? Well, I own some gold, and I own some Bitcoin. So you sell your Bitcoin. And that's how that works. Byrne says, well, when is it going to go down? Oh, well, that's what your chart's for. Okay. That's the easy part, right, Byrne? Usman, you're asking all the right questions. I spent at least an hour, probably more like an hour and a half, explaining that in great detail yesterday in the swing trading group. So for me to answer it, you will need to pay $99 and watch the video. Now, we do a lot of live group work, and you miss that, but you can pay the money and get the answer. And then more importantly, pay the money, get the answer, and learn why that's the conclusion and how we got to that conclusion. But at least you're asking the right questions. Cool. Now, going to pound, there's a question about pound dollar. Well, seasonally, that's the wrong trade. So I've already pointed that out. So probably mediocre results on pound dollar. You might be better off on pound yen. Not really sure. Okay. Usman again asks a great question. When the recession starts, will property markets also fall? Well, I answered that when I talked about how commercial real estate mortgages work and how tightening of credit standards and rising borrowing costs could lead to a change in the capital stack of commercial real estate. And what a property owner would have to do in that scenario. Now, I answered that in this live stream about a half an hour ago. So you might have to rewind. Okay. All good questions, all late. I'm getting pissy, right? I'm getting pissy. I think I'm tired. It's been a long week. So I think maybe I should pull the plug before I bitch slap somebody. Because I'm a nice guy. I'm a lover. I'm a teddy bear. I'm a gummy bear. So, but it's Friday, man. It's Friday morning. Yeah, long week. So, yeah, I got some things to do on these markets. Maybe I'm watching the goldies. I'm watching the oilies. I'm watching the S&Ps. Really don't want QQQ. I got some retirement account things I'm thinking about, and should I be hedging or should I be doing something else? But I would like to thank Group 1 and Group 2 for those discussions last night, and we did come to a basic conclusion for the next 6 weeks of trading, and I'm going to use that in my analysis of what I should do in my life. So I thank you for the conversation and the discussion. It was great. Really. I appreciate that. So now we got to, right? We either got to wait or we got to deploy some capital. So I appreciate you in my life. I'm glad all y'all are on my team. You give me the strength to get out of bed and do what needs to get done. Remember, if you want me to do real estate, look, it's in my brain. I've probably spent $15,000 on real estate courses at Harvard. So if you can get the combined knowledge of $15,000 in classes for $300, you need to prove to me that you care so much. I have a moral obligation to share this information. And you have to really, to make the math work, you have to, as an aggregate now, there's so many people that need this and desire it and demand it, that if I produced it, not only would I have a fun time, but remember, I have to give something up. I have to give up 150 hours of doing something else, which might be spending time with my children. So if you got to make it worth more than the opportunity cost. That's all. Right? Again, it's just math. So, but if not enough people need it or want it, then it makes sense. It's just the same decision of scarcity. Okay? You know what I mean? Cash says, Wayne, you don't have to be, I don't think I'm being pissy. You actually don't charge enough for what you do. Yeah. I don't want to pay more, right? But the value here is second to none. I paid more for less, seriously. Well, thank you. I appreciate that. My prime concern is share isn't the right word. I don't know what it is. Let's think about like humanity. How does humanity work? In the beginning, in particular, when you're moving from a child to adolescent to young person to adulthood, you're very focused on developing yourself, right? You're focused on me. Well, and you should. You want better life experience. You want more knowledge. You need more money because you need to buy your first house. You need to buy your first car. You have to have your first child, all that kind of stuff. Okay. And so, that career path is all, and education, it's all focused on developing yourself into an independent adult. Now, typically the next change in your life is you bump into somebody more beautiful than you, more intelligent than you, more charisma than you, brings more joy and love into the world than you. And for some reason, they find you attractive and love you too. And you can't believe it. And all of a sudden, wah, wah, you got a baby. Oh my God. And your life just changed. And you move into a second phase where you are irrelevant. For about 20 years, you're irrelevant. You wake up in the morning and you're not focused on me. You're focused on them, them, and them, and them, and them, and them, and them. And it lasts 20 years. And it really changes your perspective. It really does. Because now think of it. You spend, right? Your first 20 years, let's say, is all about self-development. From the point of you need to learn how to walk to suddenly you have an MBA. Okay? Something like that. And you go as far as you can. And then you take all of this and you focus on somebody else now. And you do that for the same amount of time. Now another 20 years, another 20 years, another 20 years, right? And then one day, wherever it is, somewhere between 40 and 50 or so, depending on when did you have your baby, at 20? Did you have it at 25? Did you have it in 30? In California, women don't have children until they're 40 because you need $400,000 in cash to buy a house. You can't have a baby without a 3-bedroom house. And so now you need almost $500,000 to buy a dog house with enough room to have a baby. So now you can't afford that until you're 40. Okay? Anyways, so you just move your numbers up, but it depends on when you start that process. So here I am, and you know, at some point that part of your life ends and you move into another phase, and it's really, you don't have any babies to take care of, so to speak, but you've been trained now to think more and more about others, right? More and more about others. And so maybe in that last period, you want to really, and it's somewhat selfish, I would argue, you want to share your lineage. You want to share your knowledge. You want to be valuable. You want to be important. You want to have meaning. And so you're like, oh my God, my kids don't listen to me anymore. So I got to share before I die. I need to be relevant. I don't want to die and be irrelevant. So there's like that normal process of self and then them and then others. My life was on that path. I definitely have that. But in my early years, very early years, so 18, 19, well, more like 19 and 20 and 21, I ran into some amazing people that were very influential. I looked up to them. They were mentors. And they were in the nonprofit world. And that nonprofit obviously was focused on others. Right? And in particular, leadership development of young people on a path to greatness, but the job was to help them become great. And so that process of focusing on others was my real first education. See, I did go to university in the early 90s, and I took classes, but I was not educated by that experience. But those mentors and being in that leadership program and being in a nonprofit gave me an amazing education. But you have to understand, the whole education was how to make the people around you better. It was 100% focused on really phase 3 of most people's lives. Give back, give back, give back, give back. I started with the more you give back, the better you are. You, the individual. But then you have to focus on yourself too. So there's this concept of to make the world a better place, you need to focus on yourself. You need to change your role in the world to then make all of humanity better. So there was this like inward focus on personal development with the overriding goal of giving and sharing and making the people around you better. And that's where I started. And so that was the path I ran into. That was the path I was given. It looks like that real estate news is out, right? Yeah, I guess so. Yeah, that must have just come out. And so I kind of like tripped and stumbled onto that path. And I've been there ever since. Okay? So, yeah, well, Cash says it's altruistic. In many cases, sure. Yeah. You know, I once made an argument that Mother Teresa was selfish. Now, bear with me, I can make the argument, but nobody ever likes it. So I would say, sure, maybe there's some altruism there, and there's some selfishness in there too. There's also this idea, I'm a lonely, only child that needs to be showered with love and attention every single minute of the day. Yeah, sure, I admit to that. There's a lot, humans are complicated. There's a lot of things going on, but I've now been doing this for over 20 years. And before that, I was sharing in similar ways with another community. Remember, I used to mentor startup CEOs, right? And why did I do that in the late 90s? Why did I mentor startup CEOs? Well, in the early 90s, I ran a company of 3,000 people with 27 offices around the United States and a board of directors that included George Soros and the vice president of General Electric, a member of the United Nations, the CFO of Arthur Andersen, the former president of AT&T. These are the people I was working with when I was 20. The former president of AT&T. Like, wait, what? You're like, whoa, lucky start. I'm telling you. Cool. So then you go all the way back. And then, of course, I was working for the nonprofit sharing. And so it was just sort of like, this is what I've been doing for 35 years. Cool. Got lucky, but I stayed on the path. So is it altruistic? Well, maybe it's just the path. The way. It is the way. Right? It's just, it's the way. And I'm still trying to figure out where it goes. So let's just keep going. One day at a time. That's all it is, right? Now, Bumpy says you give more than you receive. Well, that is the secret of life. That is the secret of business. If a business charges more than the value it creates, it goes out of business. I was mentoring somebody over the last few years that has a drug problem, a young man with a drug problem. And so I'd have him come to my property and I'd pay him to dig holes. And year after year after year, I would give him many of the same speeches. One of them is, the secret to life is if I pay you $2 to dig a hole, you dig a $5 hole. Make it a beautiful hole. Make it as wide as possible without being stupid. Make it deep enough with precision. Put enough aggregate or whatever you're putting in there, soil amendment in there, so you just know this plant that goes in the hole, because you understand why you're digging the hole. Someone's going to put a beautiful plant that's going to grow and flower for generations. So make it a beautiful hole. Make it so that that plant will grow for 30 years. Make it a $5 hole and charge $2. Your customer will be so pleased and the results will be so amazing that when their neighbor says, hey man, I need a landscaper to plant some plants, you're like, dude, I got the guy. This guy digs $5 holes and charges you $2. I said, pretty soon you will be so busy digging holes that you won't be able to keep up. You will have to hire other people and teach them how to dig $5 holes. So these are like, this is it. It's a lot like what we cover in Forex.Today or at FX Bootcamp or some of the other services, but this is what I'm telling someone struggling with personal integrity and self-worth. It's a similar message, right? So if if I can sell you $1,000 course for $88, I'm pretty sure you're going to be happy. And you'll have an opportunity to learn. And the door isn't closed. The door is open. I can share. And maybe you pull some gems out of it. Great. That's why FX Bootcamp is $88 a year. It's accessible. I'm also trying to find the 1 out of 10 that has the work ethic to turn that into something wonderful. Can a lazy person dig a $5 hole if I'm only paying them $2? No. Well, I can't. Beyond that, I can inspire, but if you won't dig the hole, our relationship is over, right? So I can teach you, I can try to inspire you, but ultimately you have to do the work, and it's a tough gig. It's tough emotionally, it's tough physically, it's tough mentally and intellectually. Our conversation yesterday was almost an hour just on the subject of, will there be a recession? Oh my God. Almost a solid hour of discussing, will there be a recession and why? It's a tough gig intellectually. It's a tough gig. So you better love it. You better love it. Okay? You better love what you do because it's going to be a tough gig. But you know what? My life experiences, everything I've done has been tough. It's been difficult. It's been hard. It's been challenging. It's been gut-wrenching. It's been spirit-breaking. But when you pull through those periods, it's more than worth it. Because even if you get through, you have integrity and you have ethic. I've done stuff like that just at great personal loss of time and money, just to save my integrity. Not for reward, just for integrity. And I think that's important. So anyways, yeah, it's a long gig, right? I've been doing Forex now for me personally, closer to 25 years. As a coach, 20 years. And it's still fabulously interesting. If this is a new career for you, I have not found a better career for you. Remember, as a venture capitalist and a high-tech entrepreneur, I've seen thousands of business plans. And let's say probably 1,000 patents. I've never seen anything better than Forex. Nothing more pure than Forex. We buy and sell money. Apple builds phones. Why? Because they like making phones? No, they like making money. LG makes televisions. Ford makes cars. Right? Imagine every restaurant in the world, they make food. They'll sell you a hamburger, fries, and a Coke. Why? They want to make money. Why don't we skip all that bullshit and just buy and sell money? It's the purest form of business I can think of. It's so wonderful. It's so clean and so pure, and there's instant gratification and you have full control. You don't have to wait for customers to come to your lemonade stand. Why are you sitting there at your fold-up table at the end of your driveway with a big picture of lemonade? You have to buy the the lemonade in advance, and you had to buy the table and the chair, and you sit there for hours in the sun, right? Putting in all this time and energy and upfront cost. Why the heck are you doing that all day? Because you're hoping somebody drives by, sees you, stops, gets out of the car, and gives you a quarter. Why don't we just skip all that? Let's just trade the quarter. And in fact, you can put up a quarter, right? And somebody gives you $2.50 to trade. And you're like, but I only got a quarter. No. Take some of mine. You have $2.50 now. Go trade. Yes, please. May I have some more, please? So I am grateful for the opportunities that I have in front of me. I'm grateful for the path that I'm on. I'm grateful that you're on my team and in my life. You're a positive influence because I have to get up every day, even if I'm tired. I have to be razor sharp. I have to be knowledgeable. I have to do my research, even if I don't want to, because I know. Like, why am I reading Fed reports and World Bank reports and IMF reports on a Sunday? Well, I know you're going to be there Sunday night and Monday morning, and I have to do it. And you keep me focused and you keep me sharp, and I appreciate that. So, thank you for being part of the community. Peace on earth. May the pips be with you. May your profits be above average. Have a wonderful weekend, and I'll see you in the morning. Remember, all the links in the description below, they're all resources for you to be connected to 25 years of knowledge and an Ivy League education. Right? And remember, click the thumbs up button and tell YouTube this was quality content. And I'll see you when I see you. Okay? Oh, and Brian, I just noticed you're there. Remember, I fixed that thing. I fixed that thing. You should have gotten an email from the cloud, Google Cloud. All right. See you soon. Bada bing, bada boom. Oh my God. That just happened.